today we're talking about NetSuite machine learning analytics, collections automation, and integrated payments. And I'm so pleased to be joined by Miles Mahoney, Chief Revenue Officer over at UBIX, Whitney Gilstrap, Marketing Director over at Lockstep, Maya Green, Senior Vice President, ERP Sales over at Fortis, and Robert Ullman, ERP Sales Consultant. Thank you, presenters, for being with us today and sharing your knowledge about your solutions and the integrations with NetSuite. A little bit about the companies. UBIX is a data science platform designed to allow business users and subject matter experts to solve complex analytical problems without relying on data scientists. Data scientists can be very expensive, and this solution allows you to automate that process of what a data scientist might have to do. So really speeds up the AI lifecycle and automates the scaling of all the tasks across the end-to-end data and analytics pipeline. So we help NetSuite users of all skill levels to contribute to the development of AI applications at scale. And Lockstep is an award-winning application that connects the world's accounting teams to help them work better and together. And they are a pioneer in connected accounting, where they connect accounting teams with automated workflows between the accounting systems, in this case NetSuite, that are at the heart of every business. So for developers, Lockstep's API is very easy, especially with a ERP like NetSuite. They have a modern platform for building fintech applications that work with their customers' accounting systems like NetSuite. For accounting teams, Lockstep's applications automate accounts receivable and accounts payable workflows that improve efficiency and cash flow. And Fortis is a leading provider of integrated payment technology solutions for North American merchants. They're differentiated because they are strategic with multiple platforms that they offer. So they have a broad suite of end-to-end payment solutions and superior US-based customer support. And that's one of the key differentiators is their response times. And their solutions are offered through a diversified network of partners and alliances. And they've built those strategic alliances and partnerships over 25 years because they've been integrating and developing not only the software, but also the relationships that are key to driving those credit card processing costs down and response times up so that their customers can succeed and grow. So a little bit about the workflow today. We're going to start it off with UBIX, followed by Lockstep accounts receivable automation, and Fortis integrated payments. So I'm going to go ahead and hand it over to you, Miles.
So thank you, Adrian, and welcome everyone. As Adrian said, my name is Miles Mahoney. I'm the Chief Revenue Officer at UBIX. So on behalf of UBIX, let me just say that we're thrilled and excited to be here in partnership with ERP VAR, with Lockstep and Fortis to describe how NetSuite customers can really easily leverage advanced analytics capability from UBIX and its partnership with NetSuite to unlock business value across the enterprise, especially during what could be some very turbulent times in front of all of us. So what you'll see in more detail, both during the overview, but also in the demo today, is how each and every one of you can benefit from UBIX from the front office to the back office, leveraging your existing data and third-party data outside of your enterprise to drive better insights and better answers to difficult questions that'll help your companies grow. Next slide. Got it. So UBIX is the only no-code end-to-end data science analytics platform designed for business and domain users in the marketplace today. And it's not just about serving up better insights. This is about serving up and enabling rapid innovation. So as a business owner, as a domain expert, as a line of business executive, you can now, with UBIX, design and develop models at your fingertips to help you get answers to questions, again, that you weren't able to get before because either the data was too difficult to get to or the third-party data that would enable you to get to a better outcome simply wasn't within a reasonable grasp. So our ability to help you drive that innovation sets the table for your roadmap as you think about multiple years in front of you. Next slide. So think of UBIX as the data science and AI platform designed to help business users and domain experts. So as an example, a business analyst or a financial analyst or a demand planner or inventory analyst solve analytic challenges that were never possible before, fast and reliably. And this really is the next big wave in unlocking business value for companies of all sizes in all geographies and really in all industries. And we call this era the era of intelligent business, where AI-enabled processes and applications tap into both internal and external data sources to generate new answers to never before answered questions and foresight that drive intelligent action for greater business impact. So my hope today is that you walk away from this presentation with a better understanding of how UBIX will help you empower business users and department heads to leverage and get insights never before possible, and improve financial and operational planning and forecasting in a couple areas. Reducing safety stock levels, as an example, by 5 to 20%, improving demand forecast by 10 to 40%, reducing your commodity procurement spend from 5 to 10%, and even potentially turning IoT into insights that can improve productivity. Next slide. So why is UBIX important? Why now, and why UBIX? So the short answer is unprecedented volatility and uncertainty and risk. We're in a market and we're in a world where, demand for products, as we've all encountered, is uncertain. Your supply is at risk, and input commodity prices are highly volatile. Every company needs new analytic tools and disciplines to anticipate and shape business outcomes more effectively. And let me add, without the need for support from IT. Really, this is a tool and a platform that should very quickly enable you and empower you to make quick and fast and strategic decisions. Traditional ERP and reporting tools alone can't address the analytical opportunities that exist from the front office to the back office. So from customer analytics to demand forecasting to production and procurement, UBIX integrates and extends NetSuite to empower all of you business users to address these high value analytic challenges with data science and advanced analytics. Next slide. So, modern business systems like NetSuite are providing a very flexible on-demand digitization of core business operations. They're driving digital transformation. And now, with the advent of artificial intelligence, organizations, all of you, can now analyze unprecedented volumes of data from disparate data sources faster on a continuous basis and more cost effectively to drive new insights throughout the enterprise. And as I mentioned, UBIX is a data science platform that manages the end-to-end AI lifecycle. It bridges the gap between the business user and the data scientist. And while other AI platforms focus solely on data scientists or even Python developers, we've chosen to develop a platform that enables and empowers you to focus on domain and line of business experts. And we believe that until the domain expert is brought into the analytics process early, AI simply is not going to be cost effective and it's not going to be reliable. Best case, it's one and done. So with UBIX, companies can leverage NetSuite and their existing infrastructure. They can combine both the NetSuite ERP data with external data. So for example, commodity indice data or weather data or Dun & Bradstreet data. And in addition to that, we have over 250 connectors to companies like Salesforce, ServiceNow, and others that help you generate better insights based on the use cases in front of you. Specifically, our platform ingests and assembles the internal and external data. We enable the business user to then build analytical solutions to put into production. And then these solutions then create new inferences and predictions and pass these on to the appropriate end user application. So this way, AI-enabled processes and applications can be built quickly and cost effectively to deliver timely, reliable foresight and intelligent action. we really help you, and if you're a partner of NetSuite, your customers become smarter without having to hire hard to find talent. Next slide. Click it again. Yep. So let me share with you a customer case study, and I hope this kind of puts in perspective where UBIX fits in the overall ecosystem. So this is a $300 million a year meat processor based out of the Midwest. They convert beef and pork and turkey proteins into various products for sale into two main markets. The restaurant market, which, as we all know, has experienced a significant decline during the pandemic, and specialty food and distribution market, which has seen really significant growth. A new CFO joined the company 3 years ago to drive digital transformation. He replaced their legacy ERP, and then he started to build out an analytics foundation. This is when we engaged and met with him in the sales process. He told us that their #1 business challenge is how to cope with input commodity price volatility. So his company's caught in the middle. And this is no different whether it's a meat processor or a manufacturer. On one hand, they buy proteins on the open market. On the other hand, large retailers are putting pressure on their price. So he wants to use UBIX to help his procurement team make better buy decisions. So he realized that his current analytic foundation is missing a critical component, namely an advanced analytics platform to combine both internal procurement data with third-party commodity index data to create models that forecast commodity prices going forward. So the output of UBIX will feed both the NetSuite ERP and the reporting module as part of their analytics workbench. So we are pursuing 2 use cases with this customer, and they both weren't kind of predefined up front. You'll kind of get a sense of it when I share this with you, but the first use case will create a reliable commodity price forecast using third-party data and historical internal procurement data. The second use case we will tackle is the demand forecast. So create a more reliable demand forecast. And once we have quantity, from the demand forecast and price from the price forecast, we can then make a more reliable procurement. So quantity times price recommendation. And as you can see from the screen here in front of you, the business value is significant. So a 3% savings per pound in procurement is worth about $1 million to $1.5 million per year in annual procurement savings. This drops right to the bottom line. So the ROI associated with UBIX is absolutely substantial. Next slide. So, that's an example I just gave you. If you have the analytics foundation in place, right? If you start with just one use case, now you've established the baseline capability that can expand and grow beyond use case #1, right? And because UBIX is a general purpose data science platform, we address any number of data types and use cases from the front office to the back office. So here's a list of just a few that we've encountered with our existing NetSuite partners and NetSuite customers. Sales pipeline conversion modeling, demand forecasting, as an example, is one of the most basic use cases, and almost all of your hard goods companies, whether you're a manufacturer or distributor, are challenged by having a more accurate demand forecast. So by analyzing your order history as well as external factors, one can create a more reliable demand forecast by time period, by SKU, by channel. So imagine, what a 30% improvement in forecast accuracy can do for a company in terms of reducing working capital requirements. It's incredible, right? Commodity procurement. I just gave you an example, a real life example of what has happened in that client. Asset monitoring and predictive maintenance, condition-based monitoring. Any manufacturer, any company that wants to better understand and detect anomalies and predict failures, UBIX can help solve those problems. So rather than looking at multiple vendors to address existing or new use cases, that whether it's supply chain KPIs, marketing analytics, market mix modeling, through and with our partner NetSuite, you don't have to look anywhere else. UBIX can help you and join you in your analytics journey for years to come. Next slide. So, the meat processing case study really underscores the reason that AI and advanced analytics is so important, not just to all of you, but really to everybody in the market. Anybody that has data has a need for advanced analytics. And at the heart of our strategy is to deliver quickly and affordably our solution library. And through our own efforts and those of our partners, we have access to hundreds of analytical solutions and models in a range of industries, from retail to industrials, to energy, to financial services and manufacturing. So many of these were built and have been in production for over 20 years. So if one of your use cases can already be addressed by one of our models, then the implementation effort is almost non-existent. And the time to value is extremely quick, days quick. If it's a first of a kind, then that model can be built by us or one of our NetSuite partners. So UBIX and its model library literally provides you, at your own pace, an AI roadmap to drive further and further value for your respective companies. So for instance, you can start by addressing demand planning opportunities, then you can move on to global capacity planning, then production planning in a plant, and address safety stock levels in a warehouse, logistics and total supply network. You can tackle procurement and predictive maintenance in equipment on the factory floor. The opportunity to drive value for your businesses is endless. So with that, let me turn it over to John to talk a little bit more about the product and show you a quick demo.
Thanks, Miles. So one of the things that Miles drove home is really you're kind of investing with UBIX in a connected world, right? So where this whole digitization and moving to this intelligent business, UBIX really empowers that, because in the digitization, you get best of breed products out there, but you also kind of further entrench yourself into these data silos. UBIX helps sit on top of that, connect those systems, and provide that critical intelligence layer to allow you to evolve into that intelligent business. We also are going to walk through really quick, kind of a very speed date focus, to be on time, but hopefully enough to get to basically allow you to understand what our product is and the capabilities that are very powerful, so that we can move forward and do lunch and learns and other teach-ins and talk specifically around your use cases. UBIX, you'll see within the demo that we break things down by spaces. So think of these as different modules. Model space and data space are the two that we'll be walking through today. Model space is our modeling environment that allows you to use a no-code workflow, which has embedded all of these powerful algorithms and functions into our platform, allow you to do drag and drop interface with the data that's connected in the data space. And walk you through that our connector within NetSuite is within data space and can be plug and play from any one of the NetSuite customers. Then we have one-click productionization, and our model library empowers both individual components such as functions and widgets, but also the solution library that Miles was talking about. And most of our customers really play with solution space, right? This is the runtime environment of the application that I'll show you today. So with that said, I will jump into our product. And UBIX, this is your landing page when you log into UBIX. And so I'm going to go into model space. And inside of model space is broken down into different workspaces, right? So our tagline is innovate wildly. So inside of these different workspaces, you can do any one of these different initiatives, and these can be handled by different people within your company, all having access to the data to the extent that they have permissions that resides in data space. But inside of this, from a standpoint of time, I'm not going to actually go through and build the different workflow. But as you can see, this is a simplified workflow for leveraging sales order data within NetSuite. Just to pull up, this was kind of harmonized data to basically look at categorical features such as category, product, warehouse, state, zip, and predictive elements like quantity, sales, cost, profit, etc. This unique time series here, this is broken down and created where we actually have 790 unique forecasts that are going on within this customer. And so these different, because someone wants to drill down to, the types of product, the actual, category within it, the warehouse, the state and zip. And so if you want to drill down to those layers, you also have to predict at that layer, right? So, and this is our action space. So each step within a process is an action. Once we walk through this different, workflow to create a predictive model, we dive into our solution space app builder, right? And so within here, this is where we basically have our different apps, right? And so you have, you can choose from a series of different layouts, select the different widgets, and then access your different data that you have within the system to build out, analytic solutions. So we just created a bunch of data within that previous workflow, and now we've got a way of interacting, with this data and actually specifying, okay, I want to look at this data from the different, warehouses, etc. We also, Miles, to talk about pricing and procurement. In different industries, this is, your typical candlestick. And in this time series, we have weekly data. You would typically have like a low, high, medium, etc. But this customer does not have fluctuations in the pricing that significant. But in the commodity-driven prices, you actually have a varying price and volume story here. You also have all of your pricing, historical, everything within UBIX is interactive, allows you to drag and drop and move things around, and everything's responsive design. In a demand forecast here, if I want to pull up and look at one of the 790 different forecasts, and this can be broken down in any type of visualization, all of this is customizable. And I want to look at a specific sales forecast. All I have to do is update this, and it'll actually pull in, show the training set of the data, showing that it's valid compared to actuals for the holdback period, and then give you a credible forecast using advanced techniques, as well as spit out exactly what the forecast looks like for that ongoing period. Just to drive home how easy this product is to use, I'll just pull in and just say, okay, let's use this, data set. I'm going to select this from our widgets. I'm going to take a scientific. I'm going to pull in a line chart. That gives me kind of a default view. I'll double click on here to pull in various data sets and submit that. And then I'll specify that I want my x-axis to be an order date for a time series and my y-axis to be sales. That basically will go and actually pull in the real data within the system. And then I want to add some navigations. And so if I want to add a navigation, I'm going in here and I'm going to say I want to do a single select drop down, and I want to have the category be one of the criteria, right? And so now I can sort between the data and interact with it, and I've built an application. All these other pages here have been built the exact same way. And then I'll show you very quickly inside of our data space product. All of our data space is our data store, so it connects into all of your source data. This also shows you all the different libraries and external data sources that can easily be pulled into your model space environment. We also show here around active connections, you've got NetSuite, and here we pulled in and published and subscribed to sales orders, and you have all your data that's available within NetSuite right here at your fingertips. So that concludes my quick speed date of our demo here. And so I'll hand it back to Miles or Adrian.
So thanks, everybody. This is Miles again. If anybody has any, would like to hear more about UBIX, feel free to send me an email or reach out to us. I know Adrian's going to provide contact information at the end of today's presentation. So thanks, Adrian. Back to you.
Thank you, Miles. Thank you, John. Great presentation. I want to see more. That looks awesome. And Whitney, you are up with Lockstep. Thank you so much.
Okay, hopefully everyone can hear me, and thank you, Miles. That looks awesome. And thank you to all the attendees for taking time today to join us and ERP VAR and Fortis. My name is Whitney. I'm the marketing director at Lockstep, and I'm excited to talk to you today about collections and navigating some of the manual challenges around accounts receivable. Basically, what that's going to include is I'm going to discuss some of the impacts of unpaid invoices and how that leads to creeping DSO. Then we'll go into why investing in AI automation is worth it. Then I'll dig into some of our accounts receivable benchmarks that we've established through our own customer base. And then I'm going to close it out by discussing the benefits of automation and why it's more important than ever to potentially look for it as a solution within your company. Okay, I know you guys kind of already heard a little bit about us, so I won't go in too much, but we're the pioneer in connected accounting, and we develop platforms and tools for developers and accounting teams like yourself to automate some of those workflows between the accounting systems that are at the heart of most of all of your businesses. I won't list these out, but our flagship product, Lockstep Receivables, which is an accounts receivable automation tool, boasts some of these stats and awards listed out here. So just to get right into it, you know, some of the challenges, marketers have HubSpot. So I'm a marketer. We have marketing automation tools like HubSpot. Sales has tools and sales enablement tools like Outreach or Sales Handy. And then, you know, customer success teams have tools like Zendesk. But one of the most vital parts of your business has little to no automation around collections. And without that automation, businesses face these types of challenges listed out here. Financial professionals manage customers and vendor workflows using multiple apps, and not all of them are connected. Of course, they're using accounting applications like NetSuite or Oracle to maintain their own books, but to send and receive accounting data and documents to customers and vendors, they use email applications like Outlook or Gmail, and then they add on to that with spreadsheets or to-do apps, and are using these to track and follow up record status, especially at period close. And then document management apps like SharePoint or Google Drive replace the paper filing cabinet, but an electronic one with W-9s or tax exemptions and more. But these apps, you know, they're not connected together, and accounting teams are left cutting and pasting accounting info between the apps, leading to that manual activity. So listed out here are just some examples of some of the top reasons for late payments. And, you know, late payments have a ripple effect on your accounts receivable in several ways. And that includes increased days sales outstanding, which we call DSO, reduced cash flow, and that increases collections costs overall. If a large percentage of your customers are late payers, they can cause DSO to expand enough to snare into what we call a cash trap. And late payments increase DSO and the amount of money your company has invested in AR. Collection bottlenecks can make reducing DSO to get out of these cash traps a really big challenge, especially if you don't have an automated receivables tool. So this is why dealing and deciding how to handle late payment behavior is super important. So first off is our benchmarks. AR staff without AR automation requires around 25 to 40 minutes per phone call. This includes prep time to get information together, so call time with customers, post-call administration, write-ups, and then additional reporting. And through the combination of phone calls and emails, the average AR staff can complete around 40 to 60 outbound communications per day. And with the limited capacity of AR staff, that means that less than 10% of customers are contacted after invoice presentment. And because staff is typically focused on that 60 days past due and above. And what we saw was that the hacker group reported that one of the biggest obstacles to reducing DSO was the lack of technology adoption by accounting departments. So before I get into all of the data, I just wanted to give a little background about it. And what's really exciting about this data is that it's all of our receivables customers that actually are in production and using receivables that are tracked over a 10-month period of time. And I'll let you read through this slide, but we had good diversification around industries, revenue size, and a good mid-market representation revenue size of about 205 million. In most of these customer interactions, a business case and ROI model was created, The ROI includes the relevant measurement for that customer. So days sales outstanding, average days delinquent, total receivables, and a target for improvement. This data was collected post-implementation and then mapped actual results back to those pre-sales targets. We have made this a standard practice for our customers as a result because they all found it so valuable. In addition to a great diversified group of companies, we also had a variation in the number of accounts and the number of size of invoices and a mixture of adoption as well. So some of these had communications that were uniform for their customers. Some had communications that reflected different customer segments like customer size, type, or credit status. And then the three benchmarks that I'm going to dig into a bit more are that we analyzed from our customer base were automated communications, customer self-service, and activity management. So the first one that we examined was the automated communications. These automated communications include reminders, statements, and past due notices, and what they replace is spreadsheets, Post-its, 3-ring binders, and I'm sure there's more examples out there that most of you know of. But these customer communications are your voice, completely customizable, and they should sound like your company and adopt the tone and content specific to your customer collection stage. They should also be tailored for your customer type or types. Many of our customers segment their customers to ensure that they're getting different communications relevant to that segment and at the relevant times. So specific to your credit policy is another communication. There's a different message at 30 days or 60 or 90, and they vary by customer type. When we compared pre and post implementation of automation, the average days delinquent dropped to 18, which is over a 53% improvement. And our customers found that communication is a critical success factor, and automation was a big part of that for them. So even if you're using automation already, you need to adopt to be more effective. And we're helping customers change frequency and content all the time. So one of those examples would be one communication being added is a customer service notification on installment plans. The next benchmark is the importance of the human touch. So, we talk about automation, but human touch is still extremely important in all of this, especially from a collector's standpoint. It is a customer relationship role. And when we ask our community, our AR community, what they find rewarding about their role is 2 factors dominated that. That was building relationships and helping others. And in the data, you can see that the impact of automated communications compared to 100% manual collections communications was the best. The best combination was the middle one, leveraging automated communications, personalized communications, and a good old-fashioned conversation. So in that first metric, you'll see that a solely automated communication-centric approach is an option that a lot of our customers have employed, and it is effective at driving people to the self-service portal and accelerating payments. And while this may be a perfect approach to smaller retail or maybe some mom and pop accounts, it often is not the right approach for some of our larger customers that have a white glove service or strategic customer types that they segment out. And likewise, a manual collector-centric approach can also be effective as representative in the 34% past due of customer outreach using automated communications, with the majority being, the AR team calling or emailing manually. But the most interesting part that we found was is combining the 2 approaches by far the most effective and represented in our study by a 16% past due. And then the final benchmark that we looked at is our customer self-service. Customer self-service is a way of enabling customers to complete activities on their own rather than the AR team having to do that extra step or activity such as resending an invoice. And using automated communication or customer communications to drive that self-service is a clear winner. We've heard loudly and clearly from our customer base that prospects that use the automated payments based on best practices and the move to remote work is a big lever, averaging 14-day acceleration. This is just one of the components of our self-service portal. Today, it includes a secure passwordless entry. So you have that customer set up within our system that the invoice gets sent out to the contact and they can click to make the payment, ACH or credit card, and I'm sure Fortis will talk more to this later. We also offer promise to pay and then dispute management, and then self-service for your customers to access their own invoices, contact information. W-9 and statements is huge for them and takes a lot of time away from that collector when it's a manual process, but having them be able to self-serve allows them to go in there and grab it themselves. Other factors of how customer self-service reduces past due and average days delinquent is that the customer has immediate access to information they need to pay, and such as POs, statements, missing invoices, and more, like I just said. But the point is taking as many barriers out of the way for the customer to pay gives you significant impact shown in the data. So these are just a couple of testimonials from one of our customers that has a NetSuite integration, and Extreme Reach, I'll give a little background on them. They provide asset management, payroll solutions, and media content for advertising, entertainment, media industries. Like I said, they're a NetSuite, and they have 6 entities billing in 3 different currencies. When we first had discussions with them, some of the challenges that they faced were data volume, and one of the ways we addressed that was multiple syncs were established to accommodate syncing over the data. Another big one for them was aging. Because of the process of future casting currency rates in NetSuite monthly, they struggled with validating aging across all companies and currencies. And then finally, another big one for them was document management. We're happy to say that since implementing our solution and going live, they have brought their total aging down 6.8%, which is huge for them. So reducing DSO is good. It increases your bank balance, which means you have more working capital to invest in your business. Then that working capital also increases your cash from operations by reducing interest expense or increasing interest income. What we also witness is that reduction in that day sales outstanding are always accompanied by an increase in operational efficiency. And finally, since the drop in DSO, increase in liquidity and profits, there's an increase in shareholder value overall. So these are just some of the benefits that we see within our customer base across all boards, not just from a customer satisfaction sense, but also from a hierarchy sense. And then, lastly, I'll just close it out with saying, when looking for an AR automation solution like Lockstep Receivables, we always like to say, just make sure that the solution has key components and is customizable to your ERP like NetSuite and business processes. These components that we've highlighted should include automated communications, as mentioned before, but again, your tone, they should be customizable, your message per customer and credit policy. Activity management, the blend of human touch, automation, and management of your team's tasks. Customer self-service, access to those invoices, statements, and ability to make the payments online easily, and removing some of those barriers within their way and yours. And then cash application leads to faster payments with fewer errors, increased ability to scale, and then of course forecasting and reporting, allowing you to be more proactive on your customers based on actual data for enhanced financial reporting possibilities. So that was all I had prepared today for you. I hope that you found the information valuable. And again, I thank you for your time. And if you need to reach out, I know that there's contact data later in the presentation, but feel free to hit our website at lockstep.io or reach out to me personally, and I'm happy to discuss more and connect you with the right person.
Thank you so much, Whitney. And we're going to go ahead and let Maya get started with Fortis.
Perfect. Thank you, Adrian.
You're welcome.
All right, so we're going to change it up a little bit today. Instead of doing demos or talking about the standard payment stuff, we will walk through some differentiators, what we do different, and some mistakes to avoid. First and foremost, we are a multi-platform model, so the same goes for NetSuite. We do have multiple options, therefore don't have to pigeonhole clients into one solution. We've been around for a long time. The team has probably right around 100 years of overall experience just on the direct ERP team, and we have 5 people that deal with the NetSuite side of it. Fortis is right around 300 employees at this point, and I believe we have somewhere around 55,000 merchants. About, I believe, 1,100 of them are NetSuite specific. We do a lot in the Sage and Acumatica worlds as well. Next slide, please. So the Fortis platform, a couple of things that differentiate us. We have the ability to do payment facilitation. We do boarding APIs and have the sales and marketing assist programs. For quick onboarding, we send out e-signature, and we do have the ability to do mobile payments. We own our own platform, so it allows us to develop into that platform very quickly, and kind of giving the client and the partner the ability to develop as needed and kind of deliver that customized experience. Next, please. So one of the cornerstones of any payments business, integrated payments specifically, is support. And what we offer is the Fortis ERP experience team, and we will offer that to anybody regardless of if you are our client or not. Doesn't matter what platform you are on, doesn't matter what solution you're using. We're happy to help, and we'll walk you through anything that you need. A couple of things that we kind of key in on: proactive approach to PCI compliance. And PCI compliance is required for every merchant account, no matter how big or small. A lot of times what happens is people don't know how to do it, so they are essentially kind of blowing it off, and then they get charged monthly a non-PCI compliance fee, right? It's super easy to go through, and again, we'll walk through, with any platform that the client has, and get them PCI certified before we're off the phone. Again, we do offer this to anybody. You do not have to be our client. Obviously, support is easier when you are our client, but the ERP experience team is available for support at any point in time if you need it. So I said that we were going to switch gears. So what we're going to do is we'll talk about a couple of gotchas, a couple of things to look at and look for in contracts when you are signing up for a merchant service provider. And generally, all of them have a contract. The term varies depending on the actual merchant service provider. The standard is a 3-year term agreement. Some have some more hooks in the back end. In this specific version here, it has a 3-year with a 3-year rolling term added onto the back end if you do not cancel within 90 days of the term coming up. What you'll see is 2 and 1 year terms as well. You could generally ask for that, and you will usually get it. Most people don't know that. What we offer is month to month, and we do that because we figure if we are doing our job right, then you guys will be with us for a long time. And so it's always good to offer every option, but the month to month is what I would err on the side of for any client. Next, please. Couple of things that are really important in your merchant service contract, whether it's ERP or the smaller merchant. Indemnification clauses are super important. It's kind of like an insurance policy, basically covering one side or both. In this case, it's a one-sided indemnification clause, basically covering the merchant service provider and not the merchant. So what you want to look for and what you want to ask for is a mutual indemnification clause in any of the contracts that you get into. That way both sides are covered and you don't have to worry about anything. As you can see, if you look down the list there, these are some of the things that are covered, and you definitely do not want to be left open for some of them. Now, exclusivity is something that is essentially a hook that's put in the back end of merchant service contract that will only allow you to work with one merchant service provider, which is generally the way that it is. But if in this case, if your volume decreases over 50%, the monthly average, they will actually charge you a penalty for that. And so if you have a bad month, you're charged. It's something that you will see in here, but you do want to negotiate the terms of an exclusive agreement. Generally, the agreements are exclusive, but the terms are what you want to look at and what you want to negotiate. Next, please. liquidated damages. Now, this is one of the really big gotchas in it because it can be thousands and thousands of dollars. In this exclusivity clause, basically, if your volume decreases, as we talked about in the last slide, what happens is you are charged whatever the profitability is that you've brought into the company per month. Say it's $400 for round numbers. You sign a 3-year term agreement. You do 12 months of that 3-year term and you still have 24 months left on the term. You have to pay the 24 months times the $400 in order to get out of that term. Now, there are a couple of additional pieces in here that will also essentially allow them to be fully open-ended. And basically it's upgrade costs, anything that they've paid for equipment, anything like that, you would be open to as a merchant, you would be open to paying if you decide to cancel that contract. So it's really important that you look at the fine print, and we do, we have counsel on staff that are willing to help you. We are more than willing to help you kind of look through it and show you the gotchas and talk you through what to ask. So this is a newer one. It's called surcharging on processing volume. So essentially, when you set up a merchant account, you give them a volume that that you do standard, right? And in this case, if you state that you're going to do $100,000 a month, and your merchant statements say that, they back it up, and say you do $300,000 in volume 1 month. What happens is you've processed $200,000 more than you said you would, and they charge you $25 per each additional $500 in volume, essentially a 400 time markup and adding an additional fee of $4,800. Sometimes you'll see, additional markups or surcharges for different card types, travel and entertainment. A lot of times you'll see 50, 60 basis points. So over 0.5% that will be put on these transactions, and ERP, those transactions can get very large. So it is very, very expensive to not look at the fine print. This is one thing that we will 100% help you with, regardless of who you're going with. We would love to have the business, but regardless of who you choose, we'll help you kind of navigate those waters. Next, please. So when you sign up with a merchant service provider, the reason that you generally do is because of the solution that they provide. Generally in ERP, it's because of the software or the benefit that you get for the tie into the software and for the overall savings. Now, what you've been seeing a lot in the last couple of years is level 2 and level 3 interchange optimization for business-to-business clients. What this allows for is certain gateways allow interchange optimization, which essentially just sends more data through the authorization process and therefore gets lower rates for business-to-business clients. Not all business-to-business cards or corporate cards or commercial cards get or are available for interchange optimization. And what you'll see in these savings analysis a lot of times is that the level 3 or interchange optimization savings is grossly overstated. So in this case, it says that out of 693 transactions, 602 of them are interchange optimizable, therefore saving the client $2,107.03 a month. Overall, the total monthly savings showed here as $3,870.25. And what happens is when it comes out in the wash, you'll note that in maybe 2-3 months, the savings wasn't what you were promised. And the way that they generally back it out is, well, your volume has changed, card types have changed. Well, really, it's been, you've been told, a non-truth up front, and that's the way that they got you excited about it, right? So you want to make sure that, one, you know how to read this. This is one thing that we will teach you how to do, walk you through it. If you want us to look at your statements, we're happy to do that. Our software our gateway does do full interchange optimization automatically, so you don't have to worry about that with us. Again, we do no long-term contracts unless the client would like one, and we do our best to make sure that the client understands and has as much info as we have to give. Next slide, please. With that, I'm going to hand it over to Rob, and Rob will talk about rate negotiation and how to negotiate low rates.
Great. Thanks, Maya. So a key point here of this slide is know the average rates for your industry. All types of industries have different types of cards they accept. So it's good right off the bat to know what's called your effective rate. And we'd love to help you find that out. Send us a statement. We can show you what you should be paying in your industry. And along those lines, always require an annual rate review. We do it here at Fortis. If your company you're with currently is not doing an annual rate review, there might be a reason. Sometimes, like Maya alluded to in an earlier slide, they wave some savings at you, and those savings aren't what they promised. The third bullet here: never accept tiered pricing. You would know if you're accepting tiered if you see the words qualified, mid-qualified, or non-qualified on your statement. That is a way it's very profitable for the credit card company to price you that way. It's not in your best interest. And always request to work with a manager, somebody that's non-commissionable. Everybody on this call on the Fortis side is in the management side, and we would deal with you directly. And we are not commission driven. So we will look out for your best interest. Next slide, thank you. Equipment leasing, or as we call it, fleecing. I can't tell you how many times I've been in this industry 20 years. You talk to someone, they're locked into a lease for 4 years on a machine that would cost $100. They end up paying $3,800 for it. We do not lease. It's usually provided by a salesperson that will get a commission up front. They might give you great pricing, but they'll make their money back on the leasing side. Best practice, either buy the equipment outright, which we at Fortis could do. And if you process with us, we have a loaner agreement. So as long as you're processing with Fortis, we would lend you the appropriate equipment if you are in a card present environment. And read the fine print. I'm sorry, you don't have to go back, but read the fine print. Our loaner is literally, I think, a paragraph. It's please give us our equipment back if you leave Fortis processing. Thank you. Next slide. The heart of a teacher. Maya brought this up. We're here to educate you, because the more you know about what you're paying and how you're paying, the better you'll be a prospect for us, because we have competitive pricing and there are no hidden fees. We're a neutral party, as Maya alluded to. Even if you're not processing with us, we'd love to look at your statement, advise you on how to maybe sharpen, have your existing processor sharpen his pencil and save you some money. Along those lines, we would look at how you're processing, recommend some efficiencies, and with those efficiencies, there's savings, and we offer multiple options for all of our customers. And this is a good one, so anyone multitasking, please look up. This is a great program we're running right now through October. Depending on your volume, you could receive up to $1,500. If you process 25,000, we will ACH $500 into your account. If you do 100,000, we'll put in 1,500. Once again, this is cash into your account. The Fortis challenge, as if that wasn't enough, we are so confident we're going to save you money, and accounting hates this. We are so confident that we will pay 10 hours of consulting time to your current ERP partner if we are unable to save you money. We're confident we'll save you time and money, but we're putting it out here on a slide. Take a picture. If we do not save you money, 10 hours on us. Next slide, please. Thank you. So once again, we think of ourselves as teachers' guides. We'll walk you through understanding, the rates that are applicable to you and your industry. We'll teach you how to decipher your existing merchant statements, and if you go with us, explain our merchant statements. I will review different structures for you that best fit your company, not us. And we will make sure, as we mentioned earlier, that you are getting level 3, 2, and 3 rates as applicable. Support, once again, we spoke about it. Even if you're not with Fortis, we will assist you. The big one Maya mentioned, PCI compliance. Anybody that's done it, it's a nightmare. We have our ERP support team that will walk you through it. We can't do it for you, but we'll assist and make it a lot easier so you can concentrate on running your business. And the last bullet there, direct access by phone and email. We do answer our phones, we return emails, and we share screens. And here's our contact information. Anything general, please, erpinfo@fortispay.com. Pretty easy to remember. And then Maya and myself are on this as well.
Thank you, Rob.
Thank you.
That concludes our presentation, everybody. Appreciate you being with us. Everybody take care.